What's going on, guys? Thought I'd do my Bullseye trade review of the week. So I've lost track of how many weeks I've been doing this. Let's scroll down and I will see. If you want to find this article, it'll be linked in the description below. And you can see for this particular service I've listed all of the 2022 trades. So last week was Penn, and then this week it was Amazon. So I'm going to talk about this week's trade. For people that have never heard of Bullseye trades, I just want to give a very quick overview. It costs $95 a year currently. You get one trade idea, a really good trade idea it turns out, every Monday morning, sent to you via email by Jeff Bishop, the founder of RagingBull.com. And the trade ideas are pretty simple, pretty straightforward, really low cost service but really high probability of winning. As you can see if you come and check out this full article and look at every single result I've posted with detail and including videos for a lot of these different things. So I guess I'm probably on week like 13 or 14. It looks like I've stopped putting the videos in, so I probably won't put this video in here either, but most of the videos I've been doing are available on this page as well. So the idea here is to show like every trade, like every possible like part of the trade, so that people can make up their own mind whether the service is something they think would help them trade or not. So with that said, let's get started on this week's Bullseye trade. So on Monday, Jeff sent out this email to everybody. Bullseye pick of the week is Amazon, and he gives a brief overview as usual. So talks about how he thinks the markets have rallied a little bit too much, how things are pulling back. They've rallied 20% since June, and he thinks it's really just a bear market rally, so kind of a micro move within the macro picture, which I kind of agree with. And he is looking, when he sent this out, is trading Amazon. So he gives a very simple chart. It's not the most helpful, just a couple of like lines and just kind of a daily chart, which can be helpful sometimes. In this case, I think he points out here that it's punching up against the 200-day moving average, and he thinks that it'll get rejected from that. So let's go down a little bit more. And he as usually goes into more detail in his 11 a.m. Eastern every Monday broadcast, where he talks about the actual like more details behind the trade. Before I forget, Raging Bull's actually holding a webinar next week called Terminator Trades. So I put together a quick little overview of what that might be here, and I'll leave a link in the description if you want to go and check that out. It sounds really exciting, so hopefully it's not just all marketing hype and it's actually a pretty solid interesting new service that they're launching. So definitely check that out. And right, let's get into the details of Amazon this week. So I played Amazon a couple of times this week, made plenty of money on it. It went really well, but as usual I left a lot of money on the table. So here are the contracts. He was suggesting Amazon September 2nd, 140 puts near $3 with a stop if it closes above 146 and a target of 133. And so the trade worked out pretty well. It was a pretty wild ride though. Let me show you the charts over here. So here's the chart. On the left is Monday and Tuesday, Wednesday, Thursday and Friday. So you can see that we ended the week much lower than we did at the start of the week. So if you'd bought puts around here somewhere, you definitely made money by the time it dropped down to here. Never mind, I'm looking at QQQ here. Let's go to Amazon. I think it's a very similar chart. Amazon. Well, it's not quite the same, it's a little different. So here's Amazon. So forget what I just showed you. I have so many lines drawn on here. You can tell it's a Friday, right? So this was a lot hairier than the Q. So you can still see if buying puts around here, you would be making money if you just held to Friday. And that's what a lot of people were reporting happened, for them. However, this is the underlying stock, right? So it doesn't tell the whole story about the contracts and buy price. So you can see you might be a little miffed if you bought the puts here and you were down for like the entire week, and then finally you made like a little money down here. But in reality, when I show you the next part of this, you wouldn't or shouldn't be buying the puts in this area because the price was already way too high on them. And so most people ended up buying on the Tuesday or even here. So yeah, let me just check this 8/1/8/15. Sorry, this is Monday right here. So this is Monday. Yeah, I'm really asleep today. Probably should be doing this video tomorrow. It's been a long week. And so this is Monday, Tuesday, Wednesday, Thursday, Friday. So most people were buying a little bit later on in the week, and then riding this down into the close. And let's have a look at the contracts. So September 2nd, 140 puts. So September 2nd, we go here. And we go over to the 140 put side right here. So these were the 140s. Sorry, I meant to right click on them. So I'm just going to send that to my chart so I can plot the actual contract value rather than the underlying stock. So now what you're looking at is the contract value rather than the underlying. So you can see that this is, let me make sure I've got this right. So this is Friday, Thursday, Wednesday, Tuesday, Monday, and then this was the weekend. So yeah, so this is Monday. So you can see that the contracts roughly went from about $3.17 and ended up at like $4.50. So if you'd done the exact plan, exactly as Jeff outlined, which was this one, buy at 3, so buy the puts around 3, you would have be buying around here, and you'd have had a bit of a drop and then a bit of a pump until you made money at 450, which is what, a 50% gain roughly over the course of the week. I played it a little differently. I went in and out and got some of these moves. But I know a few people that bought at 290s and then held all the way until up here. So overall a profitable trade. And we did break the 140s on the underlying. So if I switch back to the Amazon underlying. So the hope was that the 140s would crack, but unfortunately we got this rally, and it was due to Walmart earnings and some weird FOMC stuff. So there was a bit of a dodgy period here, but we didn't close above the 146 stop, which is this red line. So I actually added up here because it was getting on in the day, and I figured, you know what, add here, then at least I've got a very clear defined risk. So if it does close above here, I can stop out pretty quickly if it looks like it's going to close. But it sold off immediately, so that immediately put me in a lot of profit, which was really nice. And then it continued down and then down more. So these puts really paid off. I think a lot of people made money with these, even though it was a really wild trade. Let's look at some of the comments. Here's one, bought at $3, sold at $4.60, and it's cool because Jeff actually answers in the comments. And so here's another guy, 42% profit in at 306 out of 430. Patience is the key. I agree, patience is the key. Unfortunately, it's easier said than done for me. I end up taking small profits over and over again. And so yeah, so it went really well. Another really good trade. This is honestly, if you're on a budget and you're looking for a single option trade a week, is my favorite trading program of all time. And especially if you can do some management of the trade yourself. For example, if you're okay adding when things get a little crazy, you can really end up with quite large wins. So like some trade management is also required with any of these services, and Bullseye is no real exception. So I'll update the results into my list of trades in this article, so make sure you go and check out the full review if you haven't seen it yet. Alright guys, we'll update you on the Bullseye stuff next week.